Hold on, I can't hear you. Okay, yeah, I can't hear you. Okay.
There we go. We are, I think you can hear me now, McBrennan.
Yes.
Yeah, I went early, but it's okay. I'm gonna.
Yeah, I'm a little early. Yeah, just making sure everything works.
Very good. What's up, guys? Welcome back to 0xResearch. I am waiting for Ryan Connor as well, but we're joined by, as you can see, McBrennan today to talk about Project 0. Maybe McBrennan, until Ryan gets here, because I know he wants to talk to you a lot. I don't want to take any time off. Do a lot of people ask you about your thoughts on the market? Is this something you do a lot, or do you want to chat about?
No, not really. Like, I'm not
a big markets guy.
Giving directional advice is like the hardest job in the world. So yeah, I stay away from it.
That makes sense. I guess, do you want to talk a bit about, I don't know, how Solana's been going? Are you happy that you guys have been focused there still?
So we're live we're live right now. Right? Is that correct?
Yes.
And then this is just getting streamed to everyone on Twitter, basically. Cool. And then this will be done as like a podcast or like in audio format. Sweet. Yeah. Cool. Yeah, I mean, I remain more bullish on, I think actually, so what is Solana's FTV now? It's something like 80 billion or something, I guess, right?
Yeah. Yeah, probably. 80 billion.
All right. So, and it made like 2.5 billion last year or something like that. So like the multiple is just compressing right now. So it's like everyone says you can't do value investing in crypto, but I beg to differ. And then like obviously like that sort of is not accounting for application revenue as well. Like I would expect like Solana to just, as more capacity opens up, for margins to get lower and lower for validators. But yeah, that 2 billion number, again, it doesn't even account for like apps like Pump Fun or, you know, these massive apps that are just completely destroying it, you know? So, yeah.
Yeah. Ryan, you'll enjoy this. McBrennan is also a Solana bull based on the valuation, so this will be good for you.
Yeah. It's a good multiple right now. If indeed we're at like an 80 billion FDV with 2 billion in revenue last year. Yeah.
I'm a little worried about revenue though going forward with BAM.
That's what I was just saying. Yeah, I expect as more capacity opens up, I expect validators to make less money from the chain itself, but that is not including what I was like just saying, application revenue, which will also start to go to validators in some forms. So that $2 billion number totally excludes, like right when you hopped on, I was saying like Pump Fun and like these massive applications that are just wrecking. So I expect value capture to happen a little bit there as well.
Okay. Ryan.
Anyway, good to meet you, man. I don't think we met before.
Yeah, great to meet you as well.
I often do talk valuation with folks before I introduce myself, so that's right on message.
Sweet.
You were with MarginFi as well, right?
Yeah, so I co-founded MarginFi. I co-founded Margin Research.
Cool.
I co-founded Temporal. And
really?
I founded Project0. Yeah.
We just had.
Yeah, you just had Ben on. It's my boy. Yeah.
I guess I never put those two. That makes sense because I know I've seen you post about Temporal. And also, Ben is clearly involved. Yeah. Wow, you're very, very deep into Solana. Some might even say part of the cabal on Solana, like a very, very deep state Solana.
Yeah, I'm in the weeds for sure. I'm not. I will. I'm not involved with with Temporal. Like I'm not active there now. I'm very good friends with everyone on that team. And yeah, and I saw it from the start and everything those guys got to work on. But yeah, I'm fully behind Project Zero right now.
Yeah. And that's a great way to go into this. So do you want to give it like a quick introduction on what you guys are building over at Project Zero?
Yeah. So DeFi has hit this inflection point. There are teams now that have won their or are winning their corners of the market. And risk models have evolved. Program security has evolved. Like I can confidently tell you right now that Aave isn't going anywhere. Camino isn't going anywhere. Hyperliquid is like really exciting, isn't going anywhere. And so given this, as a DeFi user, you're naturally going to have your capital across like these venues, you know, for different reasons. Like you trade perps on a perps exchange, you do some like credit stuff on credit market, maybe some interest rate derivative stuff on like Exponent, you know, et cetera. And that you have capital fragmentation. And so the minute you're using more than one venue, really like the second you're using 2+ venues, you actually have inherently a need for a prime broker. You have a need to be able to now borrow against your whole portfolio. And especially if you have like this like more complex portfolio configuration where perhaps you're actually like levered long on venue A and levered short on venue B, you'd get better borrowing ability with like the addition of a prime broker. So that's what Project Zero is. Project Zero like allows you to use the venues you love using for the reasons you're using them and gives you better risk, better rates, better capital efficiency, better UX across them. And the super cool thing here is that like whenever you say prime broker, like in traditional finance, that is exclusively reserved for the big boys. Like that's for the hedge funds. That's for, you know, the super high net worth individuals. That is not for, you know, your typical guy on Robinhood. Like he's never going to get a prime broker. But in DeFi, that's not the case. In DeFi, anyone can sort of access P0, which is sort of like one of the original cool promises of DeFi, where there's not only this like decentralization, there's also this democratization. And so now like anyone has access to this tooling that previously was just reserved for, you know, the hedge funds and the rich guys. So I think that part that's very fulfilling to me as well. Like when I'm working on this.
That sounds cool. What is it? I guess like the TradFi comp, what does it look like to build a prime brokerage in DeFi versus in TradFi? Like what are some nuances that you have to be very careful with?
It's an extreme test of risk management, essentially. So as it is in traditional finance as well, like some of the biggest prime brokers in traditional finance, it's like these bulge bracket banks. It's like Morgan Stanley, Goldman Sachs, et cetera. However, like when you go back to like FTX era, one big prime broker was Barry Silbert and crew, essentially, and you know they ran into some like massive risk issues when a bunch of bad debt was spreading, a bunch of contagion was happening post FTX fallout. And so that sort of like exposed the big hole in off-chain prime brokerage, where you're essentially underwriting the credit against like these independent third-party venues. And when you're doing that off-chain, you have no verifiability. Like if the venue tells you it has like 100 million and it's good for it, maybe you can borrow, you know, 60 million against it, but it's still kind of like a trust me bro when it's off chain. And so the cool thing is P0 is completely on chain. So we can, you know, real time verify that, you know, each of the venues that we're integrating are solvent. And so that's like a big difference as well, with like our model versus if you were doing this off chain.
That makes sense. One thing I want to ask is, so Solana, okay, primarily, will you guys be marketing, or I guess like focusing on perps products or any trading venue?
Yeah. Yeah, we'll absolutely, we'll integrate, like I'm excited to integrate Drift perps. I'm excited to integrate Hyperliquid perps. I think there's some new perps players coming on the market soon that I'm very excited about integrating. And what that'll actually do is, for the first time, open up this multi-venue basis trade where you can like long the asset, deposit, earn the yield on like Camino, short the perp on like Drift, and then lever that up. And you can do that capital efficiently, which also has not been possible previously. So right now we're doing like that, but for spot. So we have multiple spot credit markets live. And so we're opening up these trades that were previously impossible. Like a trade people are doing right now is like they're longing a incentivized asset on Camino that's yielding, like 10% plus, or last I checked. And they're borrowing an asset against that collateral on P0. That's like the borrow rate is like 6%, and they're levering that up. That was previously impossible, right? Like if you deposit into Camino, you now have a spread. Now you're going to borrow at a higher rate, just isolated to Camino. So there's like some really cool flywheels here where we're directing a lot of like liquidity to any integrated venue. And then we're opening up these basis trades, rate arbs, carry trades, essentially at the start, against all of them.
Yeah, and I assume like dealing with a lot of these decks, perps decks is like across different chains. You're gonna get a lot of funding rate dislocations across them, right?
Yeah. Perps is like its own animal. So, and also like from the POV of like risk management, your risk engine levels up dramatically the minute you start having like access to perps and collateral against or any sort of derivative. So we're really focused right now on getting first like 100% coverage of credit markets on Solana, and like really refining, like our risk engine will never be done, but like really refining our risk engine against these spot products before we start adding on derivative, like direct integrations to derivative products on top of that, because then we start dealing with like a bunch of like really complex Greek stuff, and I want to be like fully prepared on the spot side before we shift our focus to that.
I'm curious if you take on any risk with these bridges, especially if you're like integrating Hyperliquid.
Yeah. So if we had Hyperliquid live like recently, we would have like taken on a ton of risk essentially when they paused their bridge for however long. Now you can build redundancy around this. So we have no like cross-chain integrations live now, but if we were to integrate something cross-chain, like we wouldn't have a single point of failure at the bridge. Like we would probably build like our own messaging layer outside of the bridge that, is housed on our own infrastructure. And we take this approach with everything. We have massive redundancy with liquidators, massive redundancy with like oracles and pricing systems, etc. So the same would be true for bridging infrastructure. So that's not to say that because Hyperliquid paused their chain, we just wouldn't be able to operate, but it would like add definitely a lot of complexity. So, when we do eventually make, our first cross-chain integration, it'll definitely be on top of extremely robust, redundant bridging infrastructure that has been live for, a while.
I presume it means some form of layer 0 integration, but we don't have to chat too much about that.
No, layer 0, wormhole. I mean, kind of all the above. Yeah.
Ryan, you've recently been increasingly interested in prime brokerages. Do you want to?
Yeah, I think it's a big gap in the market. We've been talking about it for a bunch of years. Like, why is the time now? Right? Like this has been tried. Sorry, there's been like a lot of cold starts. Like why is the time now?
Yeah, the time is now because previously risk engines were not nearly as sophisticated as they are now across DeFi. Smart contract risk was not to the level it was now across DeFi. And also there wasn't a lot of winners. Like it was very, like if you were a DeFi team and you lasted more than 1 year, you were doing great, historically. again, like those, like all those variables have now changed. There's teams I know that are going to be here next year. There's risk engines across these teams that have proven to be to withhold a host of market conditions and market events. And so now you can sort of make the levered bet on them, which is like what we're essentially do. Every integration we make is like essentially we're saying, okay, we've validated the market risk with this particular venue, and we're comfortable, spending 2 months like building out really, particular integration tooling around this to open up like credit against this venue. So all those things were not true like 2 years ago.
One thing you mentioned, the smart contracts. I guess like what would happen if one of the lending venues that you guys are using has bad debt? Would that affect project?
Yeah. Yeah. So if an integrated venue that we have live were to have some sort of socialization event, that would also impact our credit proportionate to the amount of collateral we have on that particular venue, essentially. So we've done this. Right now, what it would do is it would kind of impact the whole credit pool. So like if, there's $100 million on Camino and Camino has to mark down their assets by, like 20%, and there's $100 million on Camino through P0, then yeah, that $20 million socialization would sort of like be spread across the entire credit pool on P0. What we're looking to sort of shift to is to focus that socialization per venue. So really to only affect the people that chose to use that venue on P0 disproportionately to all the other like people that are using different venues on P0. And that's something we'll definitely do. That's very achievable. We're just sort of in V1 right now, which is where it's equally spread across the credit pool. So that's why like we're very particular on the venues we integrate.
Yeah. So it's just Camino right now, but I assume you're going to integrate essentially every lender in Solana and then add on EVM, right?
So it's Camino and the Project0 market itself, which already opens up like a incredible amount of like differentiated trades. And the Project0 market has like $250 million of liquidity in it, and like 100 million of that is borrowed. And we have like 200 million more across like other systems of ours. So we're the largest decentralized prime broker in crypto right now. And we've also been like one of the fastest, if not the fastest growing DeFi app on Solana. We've been averaging over 1 million per day of inflows since launch, which was in September. But yeah, it's just Camino right now. To your point, we'll first get 100% credit coverage of all Solana lending venues. So Drift and Save are audited, and essentially we're just working on and done. And we're just working on the application rollout with that. And then soon after we'll go live with Jupiter Lend and Loopscale. And then we'll kind of be there. Like that's pretty much 100% market coverage. And then we'll start to shift to derivative products. Like we'll start to integrate perp markets. And I also like, I'm massively bullish on like interest rate derivative markets as well. So I'd like to see more direct integrations to those as well.
Oh, like rate X, exponent, maybe pendle.
Yep. Yeah, exactly.
Cool. Yeah. One concern I've had is like Solana hasn't been able to come up with this perpetuals protocol yet. Like Drift is good, but it's just like it seems like Hyperliquid and Lighter are kind of doing very, very well. So
yeah,
I'm happy that you guys are like not pigeonholing into Solana, and you're like, we'll just do it like across because it makes the most sense.
Yeah, we can go anywhere. That being said, I am so I've been very close to a lot of like perp teams on Solana and a lot of just like market microstructure stuff. And I am very optimistic on the state of like Solana perps, like in 2026, essentially. So, yeah, this game isn't won yet, I would say, but yeah, we can definitely. Hyperliquid is a fantastic product, and Lighter is killing it right now, and so respect to both those teams, we can definitely integrate them. It's just like those two. The sad part is like Hyperliquid. Like I don't even think there is a direct bridge between Solana and Hyperliquid. Like we'd have to go to Arbitrum and then to Hyperliquid. And Lighter is also on this like custom ZK roll up thing. So that's like the sad part where like it is like that's more risk and more work for us. And I would like to just see more history with these things first so that we can hedge against things that happened. What was it like yesterday with Hyperliquid? But yeah, they're great products. So we got to go where there's user demand, and there's definitely user demand there.
And I think that makes sense. And when you say 2026, you expect a big year for perps. Is that just with new launches coming up, or is it? From what I understand, is like BAM is meant to help these products out, or why?
Yeah, so there's a lot of innovation happening at the like Solana client level, which like BAM, like what the Harmonic guys are doing, and et cetera, and a lot of competition there as well. Anza as well. So the brain power between Jito team, the Tempo guys, and Anza is great. Like the fact that they're all sort of going after this is just going to end up in a really good outcome. So, and that will give a lot of optionality to applications, which will be great, which should like tighten spreads. And if it doesn't, it's a failure essentially. And then, like we've seen the emergence of, so then we got like new teams like Bulk. There's other new teams that haven't been announced. We have like Drift V3, and Drift V3 seems to be, last I looked, prioritizing prop AMM makers as well, which is really cool. Really, really cool. I am a big believer in prop AMMs being applicable to perps, not just spot as well. So we've seen what prop AMMs have done with spot, and sort of like just completely changing. For the first time ever, you can get better prices on chain than you can get on Binance with prop AMMs with spot. And so the combination of like those variables I just threw at you, I think is extremely optimistic for Solana in 2026 with perps. So, yeah, I wouldn't, again, respect to Hyperliquid and Lighter, but I do think, I think people might be underestimating how important this is for Solana.
Could I ask more about prop AMMs and your views, just given how deep you are in Solana ecosystem? Yeah, like, I mean, what do you think about passive liquidity on Solana going forward? You have to assume that these prop AMMs are going to eat more and more of the market, just given the success that they've had. Like,
yes,
is there a place for the old models on Solana?
Yeah, that's a great question. So the hedged version of this is like, oh, let's just have a composable order book and prop AMM, and we'll have like these prop AMMs like fighting close to, the spread, and then we'll have like these more passive quotes across the edges of the order book to fill in depth. But saying that, and this is also on the back of, I'm very good friends with like KV over the temporal side, and I was talking with him about prop AMMs recently. So some of this thinking is shared between him and I. It's not just me exclusively coming up with these ideas. I think people underestimate the depth of prop AMMs and how quickly they can update if like a big order comes in. So everyone keeps saying we need these order books because, if someone wants to slam a $10 million order, they're going to need to eat into the order book a little bit. But if that in practice happens with the state of today's prop AMMs on spot, and these prop AMMs have access to adequate inventory, they can update so fast that they could just eat that all up. And I think people are underestimating that fact. So I think that like a prop AMM alone could potentially just handle 80%, 90% plus of like all trading needs. And people can try with order books, and also from like my point of view. So I'm coming at this as someone who is offering credit against multiple, it's like from the P0 perspective. And when we're on these permissionless systems, like we're talking about like liquidations, which are automatic, permissionless, and like I need a good idea of market depth to manage solvency. Like if I'm offering credit against like if I'm offering the ability to borrow $100 million against a particular asset, and that asset needs to then be immediately liquidated, I need to be able to sell big chunks of that asset on the market, and liquidators need to be able to protect solvency fast. And so historically for me, it's been great if you just put that in like a constant product AMM, and I can just be like, okay, cool, there's like $5 million of liquidity here. I know exactly how this models if a big like buy or sell comes in. It gets much more harder with prop AMMs because like their depth isn't really representative of how much they could swallow up when you're like looking like, oh, this prop AMM only has like 30K in it. Like, no, it could probably actually eat up like 150K of like sell pressure immediately. So that part is going to be more of a headache for me. But hey, that means like DeFi is evolving. So that's cool. Yeah. I gave you a really long answer. I'm very bullish on prop AMMs. I think they can be used for perps, and I think that market structure could just like almost entirely shift to them with safety measures in place across AMMs and order books. Like I think Sanctum is really great. Like look at what Sanctum has done for Solana LSTs. They just put this big pot of like SOL and LST liquidity in one place. It's easy to model, and Camino and P0 and Drift, and we can underwrite like tons of credit against LSTs now because of that. I'd love to see the same for like Bitcoin products. I'd love to see the same for ETH products. I'd love to see the same for stablecoin products. And so that's also totally agnostic to a prop AMM or an order book. That's just like kind of like, I think AMMs are like really important for those types of products. But yeah, I think we could see this power law with AMMs and then prop AMMs essentially. And then order books are kind of like this weird middle child.
The one thing is, Ben also said this. One thing that was in my mind is then you never let price discovery happen on Solana, right? Because you're only getting price feeds from Binance.
Well, that would be like saying that. So all these prop AMMs are reliant on like this internal oracle, right? That's saying that like you would have no pricing alpha with your oracle, which I don't think is. I think like a lot of these guys are capable of figuring out where prices should be and updating their oracle accordingly, and then price discovery is once again happening. Yeah. And now it's happening on chain instead of on Binance. So we're not just reading off of Binance and updating prices. Now we've actually finally, for the first time, like this is also like the biggest dream for forever that has never come true. Now like price discovery is actually happening on like these prop AMMs fighting on Solana, which would be incredible. Yeah.
That makes sense. Brennan, I have two more questions and then we can wrap things up. The first one is moving away from MarginFi into Project0. I can see a clear, like, we're doing lending. Why not do it at a much larger scale and much more ingrained scale? But what's the story like over there?
Yeah, I mean, so yeah, I was part of the MarginFi team. It was like the fastest growing DeFi product of 2023. And then, my co-founder had a very bad day, crashed out, and he destroyed a lot of trust, like in a very short amount of time. And, that was really disappointing to me. That was disappointing to like all the people on the team that had put in a lot of time and effort into making this like a really successful product. And the easiest thing I could have done in that situation is just be like, okay, I don't want to deal with this anymore. I'm gonna, take this really, really talented team and go do something else. But I decided, not to do that. And we still saw, this massive problem with capital fragmentation on Solana. So I was like, okay, let's rebuild this from the ground up with this really talented team and build something net new. And so, and the nature of doing that, I had to do that sort of behind the scenes. I couldn't give a lot of meaningful updates. It took about a year to do this, to get to that, the point in essentially September, which is 2 months ago, to be able to launch it. But I felt a deep, I felt a deep respect to our user base, a deep respect to our stakeholders, and a deep respect to our team. And I knew we were very capable of this. So that sort of marked that transition. In doing so, I also MarginFi was in a rough spot. If we didn't make any big changes, the company would have went bankrupt. So that's when with Ben, with Jacob, founded Temporal. MarginFi and Temporal worked very closely together to essentially save MarginFi from bankruptcy. Lots of sleepless nights, but that all that sort of got us to the point where we could take a stab at on-chain prime brokerage. So I've learned a lot from it. I've grown a lot from it. I deeply love the people I got to work with during it all, inclusive of Ben, who you had on, inclusive of Jacob, KB, guys on the Temporal side, and then a bunch of guys on the Margin side as well. Adam and John and Abdul, etc. And then our investors, which would be Multicoin and Pantera and Solana Ventures. All that together really held the ship together. And now, we're on this really exciting new chapter, and we're one of the fastest growing teams in Solana DeFi. And we know very well what we're capable of doing. So that was the story there. That's the lore. Yeah.
It's good lore.
Yeah.
It's very good. Okay, just to end things off, what does the next 6 to 12 months look like for you guys? And what do you think people who listen to the pod, listen to the live stream, should be doing with regard to Project Zero?
Yeah. So the next 6 months involves wrapping. We'll be fully wrapped within 6 months. We'll be hopefully have our first derivative market live at the end of 6 months. We'll be fully wrapped with credit markets on Solana. We'll have 100% coverage. So if you're coming to Solana and you're using lending programs, you should get a more capital efficient, risk aware experience through Project Zero. You should get better risk, better rates, better capital efficiency, better UX through Project Zero if you're using lending markets on Solana at the end of this 6 months. And if you're not, we're doing something wrong, and you should DM me and I should fix that. And that again is and what that will do as well, it'll be this really cool efficiency flywheel to all our integrated venues. So what should happen also is that rates per asset should adjust to their risk adjusted return per venue, meaning maybe USDC on Camino, it's super safe and it's at 5%, on Drift there's a little bit extra risk, and so it's up at 6%. And then all of these different rate differences across venues can immediately get arbed capital efficiently to their risk adjusted level. So that flywheel should happen. Solana credit markets should become super efficient. I'm excited about that. And then, we should be live or close to within 6 months, certainly. We should be live with our first derivative integration, probably a perp market. And then I'd also love to have some interest rate markets also live. So those two things. Also at Breakpoint, I will be talking, so Breakpoint's next month, Breakpoint's in essentially exactly a month from now. I will be talking about the Project Zero token and how we're thinking about that whole, all that. And we're very focused on getting a token live before derivative markets, because we see derivative markets being essentially our biggest opportunity for growth. So this way we're not launching a token at the top. And also it's fantastic now, like markets are down. And so like, this is a great time, I think, to get a token out. So I will be talking about the token at Breakpoint. I have like a talk at Breakpoint, and I want to get that live before our derivative markets start to go live. So that's 6 months. I think that's about as, you know, those are some big things. So yeah.
That's very exciting. I guess because you brought up the token, now I feel like I have to ask this kind of, in terms of how does a prime brokerage's, I guess, business model work? I'm not particularly like, do you just clip on fees? Do you clip on interest, paid interest, like borrow interest? How does this work out?
Yeah, it's pretty multifaceted. So there is inherently like these spreads associated with offering credit, and increasingly differentiated spreads per asset based on its riskiness, which introduces the ability to capture additional fees, essentially. So that's one fee source, is just inherently spreads. Another fee source, actually, that a lot of people disregard is order flow as well. So like, we should be a big generator of differentiated, unique, like liquidations. We should be a big originator of like collateral swap options and you know, interest rate and like, especially as we see the maturation of interest rate derivative markets, a lot of like the interest rate moves that'll happen on P0 will directly impact them. And so like, this order flow is actually very meaningful. It's different than order flow when you think of like Jupiter or like Titan or DFlow. It's completely different. So like, that's its own sort of order flow segment, and we would be like a very differentiated order flow segment. But also with liquidations, that also is like, you know, every time someone liquidates on Project0, the program captures a fee on that. And liquidations are open to anyone. Any profit motivated actor can come in and liquidate. So those are some bigger areas. And then finally, like, we have a world-class application team at P0, and we have some differentiated apps that will also go live. One of which before Breakpoint as well, so within the next month, that introduced like its own, you know, fee capture. So like a good example of that is like our strategies page that we recently launched, where we sort of surface like these differentiated interest rate arbs and carry trades that you can only capture on P0. And many of these, you know, we just show the spread right now. We're about to update it actually, but with leverage, it's like 20% plus yields on assets you're already holding. And so any sort of like automation or point and click functionality on the application side, that's very valuable to users, and users will like pay a few bips for interacting with that. So that's something we want to double down on as well. I'm very much like of the thought camp that programs, like DeFi programs in any sort of like sufficiently competitive market, fees should compress meaningfully. Like, programs themselves should not be able to capture a ton of fees. And a lot of the fee capture should happen at the application side, is where you have like this exclusive relationship with the end user, and you can offer like really great tooling around what the DeFi program provides. So that's how I think about things.
I think that's the general Solana thought process, and it opens up like, how will Solana generate revenue going forward? Is there like a rent thing for you guys, for example? So it's
well, it'll be the same thing. Like in like an app, someone using a perp trading app will like, I want my order to be prioritized, and so they will pay a fee to the application, and the application may share that fee with like a validator, for example. And so that is something that currently the Solana program isn't set up to capture. But that will be like inherent value to the Sol token itself, essentially, for using this, you know, shared database, essentially.
Yeah, that makes sense. Ryan, anything you want to ask, or no? We're good. McBrennan, I thank you for coming on. This was very, very
Thanks for
interesting.
having me.
Do you want to, I guess, like, people should follow Project0. We'll put this in the show notes, as well as McBrennan CC, who does not do as many shirtless live streams anymore. Which
yeah, that was like peak bear market 22, essentially, where I was like, all right, well, that was a different time. That was when everyone was, considering leaving the industry. And I was like, all right, well, what's the worst that can happen?
Yeah. Very good. All right.
Yeah.
Have a good day.
Yeah, you too. See you guys.
Bro.
It's just you and me now, Ryan. Can we talk about the
Market
markets a little bit? And then Ian's going to come on and I'll let you go. But I sold
Yeah, let's do
this
it.
morning and I think I messed up. What do you think?
I mean, today's the bottom, so that really sucks for you.
For
I hope you didn't
context,
sell too much.
no, I did. I did sell quite a bit. For context, I messaged Ryan this morning, European time, and I presume it was like 4 a.m. for him, and he was like, "Why do you always sell the fucking bottom?" So I don't know. We're gonna see what happens.
True story.
I'm happy you came on this pod because I think it incorporates like 3 of your favorite things, which is prime brokerages, perps on Solana, and also how can Solana make revenue going forward. And I didn't know this like applications can pay a fee thing was a thing that they're thinking about. Imagine if McBrennan's talking about it. This is something they're quite actively thinking about.
There are a lot of uncertainties, I think, in Solana land, but there's also a lot of things to be very excited about. I think one of my big failures of 25 was just assuming that it would look a lot like 24, but things are so rapidly changing in Solana land that it's hard to get a handle on it. I think 26 is going to be really exciting, and I'm looking forward to seeing how the chips fall. I don't know what's going to happen. I really don't know, but the ecosystem has so much momentum. It's like I said in the beginning of the call, like I'm a little worried about the monetization thing. But I think Hyperliquid is proof that and Solana in 23, 24 was proof that if you kick the fee low enough, you can really offset in volumes and make up for that. So, I'm optimistic.
Yeah, one thing that kind of has put me in the same boat in terms of I don't know what the hell is gonna happen in 2026. There's our Solana guy coming in. I don't know what the hell is gonna happen in 2026 is purely because in my mind the landscape was very clearly Giro beforehand. It's okay, Giro controls majority of how Solana value flows through. But if they're bringing in these what the temporal guys are building, Harmonic, as well as clearly ANS is much more competitive than it used to be. I don't know what's going to happen with Fire Dancer still. I have no idea where that development is going. But it's going to be kind of a weird 2026. Ian, you're a validator, a part of the Solana cabal. What are your thoughts on what's happening in 2026? You need to unmute, by the way. I don't know if you know this. Can you hear me? I don't think you can hear me.
Yeah. I think you guys are right. I mean, it's kind of anyone's game for the next year. I can hear you. You can't hear me?
You're very delayed.
Sorry, I think the audio is messed up on mine. I think the audio is...
That's it. That's it from him.
No.
I removed them.
Yeah.
They'll pick stuff up and come back.
That was the most impressive delay. I've
Yeah.
never experienced such a long delay on a call before.
He just looked right back at me. I'm going to try him again. Are we ready? Hey, Ian, can you hear us now?
Yeah. Sorry, I can hear you. I had it playing through Twitter, and so there was a delay on my end. I was I didn't have the actually live audio. I had the Twitter audio. But yeah, no, sorry. You guys are right. It's everyone's game for next year. You can hear me now, though, right?
Sorry, keep going. Yeah. Yes, we can hear you now. There was trouble syncing state across nodes.
Yeah. We IBRL'd that though, right? Right, Boccaccio? So yeah, but anyways, for next year, I think it's great. There's like tons of competition over there now. Like I think like one of Mac's points was like it's going to result in just like better outcomes no matter what, because you've got like a bunch of smart teams working towards like, you know, the best user outcome, which I think is great. So quite happy about that. And yeah, I think if you like start looking at like the judo guys, like they're definitely like locked back in now, because like there's a lot more competition than they've ever faced. And like props to like the Agave team as well, because like they stepped it up when Fire Dancer came in. But yeah, I mean, it's looking really positive. So yeah, I think it should be a good next year.
Have you looked into these new perps protocols, Brian? Have you like bulk trade, etc.? Kind of, right? Ian, did you?
I mean, we chatted with like Bulk earlier this week, but I don't fully understand their architecture yet. But essentially, my takeaway is like they're going to be able to be running perps on Solana with like 20 millisecond latency, and so like that's really good, because I mean, even on like the fastest like SVM implementation we'll see with Fogo, which is like 40 milliseconds, they're going to be doing half of that on like a chain with already existing distribution. And the guys who are building it themselves, they understand like trading quite well. Like apparently they were doing like market making prior to this, and like now they're building their own platform. So that's quite cool to see. But yeah, that's like the one thing Solana has not cracked yet, to be fair, is like the perps trading. So obviously like BAM can help people build out like a better like perps trading experience over there, but I don't know if BAM can solve like the latency in the same way. So it seems like Bulk is kind of going after like the timing game there. So yeah, hopefully it's a great product and hopefully people use it. But yeah.
Ian, I have a question. Will BAM enable Hyperliquid like performance, or will it not?
I mean, I think like in terms of ordering and stuff like that, it'll be closer to what you see, but I don't think like you're still going to be subject to network latency, right? And so I think Hyperliquid is, correct me if I'm wrong, Buck, but I think it's like 80 to 100 millisecond blocks, right?
Yeah,
and so
but it's like being lowered on testnet quite drastically. It's at like 50 milliseconds on testnet.
That's really good. So Solana right now is like 400 milliseconds, I believe. And that it's like an existing issue right now in Solana to try to make sure that people are not like slot lagging either. Like trying to get blocks to be faster is kind of an issue, because a lot of the larger validators realized if you make your blocks go longer, then you can produce more profitable blocks, which is like, you know, it's like it was a timing game thing on Ethereum for a while. It kind of got labeled as that, like the EF-research cabal. And then people realize you can do the same on Solana. So it's a little hard to crack down on that from like the protocol level itself. Like obviously, if you're a stake pool, you can blacklist validators that are doing that. But I think it's going to come down to like what's really going to make Solana competitive with Hyperliquid from like the perps trading standpoint is always going to be like that networking latency, like how fast are the blocks produced. And like I think naturally you're also seeing the Solana validator count continue to shrink. Like when we joined the set, there was 1,300 validators. Now there's 860, and that probably continues to shrink as the Solana Foundation like claws back a lot more of their delegation. So that will end up with a lot of the validators probably being, you know, like located in the same data centers. But obviously, like it's pretty hard to drop block times meaningfully to compete with Solana in that way. So I think Bulk might be like the most viable solution to compete with like Hyperliquid in that sense. But Hyperliquid also has like a massive lead now in terms of all the distribution they have, all the users. There's this really crazy dashboard that came out, and like one of the things on that was how often or like what percent of users are coming through like the builder codes. And it's some like ridiculous percentage. I think it's like 60% of like all users right now are coming through those builder codes, which is like the ASXN dashboard. So I'll probably share that on Twitter or something. But yeah, really, really crazy lead that they have over there. But Yeah.
That is insane. I saw that as well. The 60% coming from building. I mean, that's just. I wonder if bulk is a network extension, by the way, or do you know if they're building directly on Solana? Because to me, like 16 milliseconds latency directly on Solana seems impossible.
Yeah, I need to dig into like their docs again. Like I didn't really get it first time around, but it sounds like it's more some sort of sidecar implementation. But the cool part is like they're also going to have like their own like agave fork, and then the validators are paid in stable coins, which is pretty cool. So like you'll be able to get additional yield there, and it'll be in stable coins. So I think like that'll be pretty attractive for getting some stake there. But yeah, I also don't know. I don't know what like percentage of stake they would need for the network to function in like the most optimal way. But yeah, I think that's definitely one to like watch.
Yeah. I guess like my last thing here is with regard to how you said like perp dexes have never been figured out. Ryan, I'm curious what you think here as well, but like it feels like every chain has something that they get really, really into. And it feels like Solana just got really into prop AMMs. Like all of the like really, really smart guys are just involved in prop AMMs now. And like on Ethereum, it's like whatever validators or decentralization or like cypherpunk stuff. But I'm wondering if that's kind of removing the like efforts going towards building out perp dexes. Although now it seems like bulk and stuff is coming out, but on Monday we had on Tuesday we had Ben from Harmonic, and today McBrennan. They were both like, oh, like we can use prop AMMs to do perps products. And I was like, well, why not just focus out on building out like a order book for perps products, right? Like that to me feels like something proven, something that's worked before, and then like just focusing on building that out to me makes a lot more sense. Any takes here? No takes.
Yeah, I mean, it seems like a lot of the Solana intellectual community is definitely one-shotted by prop AMMs.
Yeah,
some could say in the same way some people really like trains and other fun things like that. But I thought that was an interesting point. I haven't considered anything around that. I think that's more of Daniel Smith's alley. I think he's also quite interested in trains and prop AMMs, to my understanding.
He fucking loves prop AMMs. Carlos as well got one-shotted by prop AMMs. We do this newsletter every day. If anybody wants to subscribe, it's called the 0xResearch newsletter, daily market insights from the analyst team. And every time I read Carlos's piece, it's about prop AMMs. It's insane. I'm like, how can you keep writing about prop AMMs? And he fucking loves it.
I mean, I guess it is kind of like the only kind of new evolution we've seen of like on-chain trading on Solana right now. But yeah, I don't really understand like the prop AMM value prop there. So would like to learn more about that.
Yeah. Ryan, you unmuted.
I got to run.
It's
fun while it lasted.
It was fun while it lasted.
This was great, Ryan. We should do it again sometime.
It was really good seeing you both. I'll see you in the chat.
Very good.
Peace.
Right, removed and kicked. My favorite thing is to remove and kick people. Ian, I need you for 15 more minutes. But before that, I want to give a massive shout out to Aptos for sponsoring this stream. Aptos, Bitcoin DeFi is heating up on Aptos. With nearly $400 million in BTC assets on chain, Aptos users can now earn yield on their Bitcoin via Echo ABTC and OKX BTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. Thoughts? Let's not do this. But it was pretty good. I like my segue.
That was good. That was a really good segue.
I think so too. So Ian, you're not typically known as a trader, but I tried to ask McBrennan his market thoughts, and he was like, I don't want to talk about this right now. I asked Ryan, and he was like, I don't really want to talk about this right now. I'm going to talk to you. What are your market thoughts right now?
That's what people are tuning in for. Yeah. I mean, yeah, I think the market's in a bit of a weird place. It's just been hard to actually get any sort of read on it since like 1010. Like market has just not really recovered since then. Everyone's just like cryptically talking about bodies floating to the surface. And it's like, okay, well, what exactly happened? We don't really know. apparently like some funds are like, still like, I don't know, waiting to. I think there's like stuff we maybe shouldn't talk about, but I think in general it seems like it's an issue maybe outside of crypto's sphere, right? It kind of seems like a broader macro issue, like the fact that like Nvidia's down is also kind of obviously hurting everything. But yeah, I think like Sam Altman has been moving kind of weird. I think the AI people are moving pretty weird. I think people are starting to ask a lot of questions over there around like, you know, are these companies like appropriately valued? How does like OpenAI plan to IPO like $1 trillion if they're doing like 1.6 billion ARR? Why is there no monthly economic data for the month of October? It's like kind of hard for like, I guess like investors outside of crypto to really kind of assess what's going on out there, because it seems like the US obviously went all in from a financial standpoint on crypto, not crypto, AI. And like the big idea there is like it's going to bring all these productivity gains. And meanwhile, like it's just everyone making like slop with AI for the most part. Like seems like that's like the largest consumer use of just like, you know, brain rot maxing. So
I don't know. One thing is like, yeah, Sam Altman's been moving pretty weird. This is the official term. And he's like, oh, like, you know, the taxpayers will fucking cover it. And it's like, okay, what are the taxpayers covering? It's like old people looking at their phone for 16 hours a day. And it's like, I swear to God, every time I see somebody in the metro, it's like somebody looking at this like woman jumping into the pool and like getting all the water out of it. And they're like, is this fucking real? It's like, yeah, Sam Altman's gonna make people pay for this as well. It's insane.
Maybe we should raise the prices on that if like that's like the main outcome. Maybe that will solve some of the slop. But yeah,
I also don't really understand how they monetize any of it. It seems like they want to do. It's just a really tough sell, right? Like you start off AI by saying, okay, we're gonna essentially solve like human capital problems. We're gonna make sure that everybody has like exceptional tooling and knowledge under their palm at all times at like record speed. And then it's like, okay, how are you going to monetize it? We're going to serve ads, personalized ads to people who are chatting to it. And also the main two use cases are slop and people falling in love with their chatbots and using it as like personal diaries, essentially. Ryan would be so upset if he was here. I'm glad he left before we started.
Yeah. I think it seems like the real use case there could be like health related things. Like all the like, I don't know. That seems like a harder. I have no edge over there either though. I think like if you're trying to do like deep scientific research with it, I'm sure it's like helpful.
Yeah.
But also for like the most part, it seems like people are just using it for slop, using it for like coding, and like some of that coding is just like to code like some like slop app, like vibe coding obviously is like there's a lot of like just low effort things that have come to market. So yeah, I mean maybe they should like raise prices and see like how sticky like the users actually are, and like then maybe you get like some real stuff out of there. But I think back on the crypto side, despite like prices being down, it seems like directionally a lot of the tokens are moving towards the right thing in terms of actually starting to have like an idea of like, this is how the token makes money. This is like, we're going to use like the protocol money to do this. Like, obviously like Uniswap was like the one that everyone's been dogging for just like years now, because it's just been like, you know, it was like the first big DeFi coin and it was just like cucked for so long. So it's nice to kind of actually see some progress over there. Lido came out with like their fee switch, like that's all cool. And like meanwhile, like the protocols that just started doing buybacks from like day one, I think those will probably be the ones that are going to like actually end up outperforming like going forward. So like whenever we get some sort of recovery, I'm sure like Hype probably rebounds pretty fast. Pump probably rebounds pretty fast. Like Pump is like now they bought back like 11% of their circulating supply.
I sold Pump today in the morning.
I mean, how's their revenue doing, by the way? Like they every time I check it, it's like they're still somehow making like, you know,
exactly what I was going to say.
Millions. Yeah.
Every time somebody brings up Pump, they're like, how the fuck is Pump still making $1 million a day? And it's just like, it's one of two things, right? First of all, I think that Pump's revenues are legit, but there's always like two thoughts that pop into your mind. One is like, okay, I have no idea what this market actually wants and looks like.
Yeah.
Like there's clearly strong demand for this one product that I just generally don't understand. And the second thing is like, okay, they're cooking the books, but they're not cooking the books, because if they're cooking the books, it's a horrible look for them. Like they're using raised cash to buy back, which either way is fine because they're just buying back 11% of the token. But clearly, these guys are just, there's this market of crypto traders still out there who are trading Pump Fund coins, and I don't know who they are. Do you, like James Kristoff sends in one a week? He's like, this is gonna be a cook, and then it goes down 80%. That's my like only relationship with Pump Fund right now.
Yeah, no, I agree with that. I checked, I saw like their Arkham entity or whatever. Like they still have like the $1 billion of cash in there. So, yeah, like right now they're holding like 889 million of USDC, 299 million USDT, 166 million of Sol, and then it's like their Arkham entity, so it's going to count the pump they have too. But it says like 1.84 billion of pump. Yeah, it's interesting. I guess like someone's still using it. I do think it's like those things that like there's a lot of like attention tokens, right? Anytime like there's some weird new event, like people are launching jitters for it. And I guess there's like people that are still trading these things. But yeah, I mean, I think they're probably doing the right thing of just shoving that all back into the token, and it seems like they're just trying to corner their own supply, and they're sitting on $1 billion of cash. So yeah, I think they're, going to stay on course for this.
Yeah. With regard to your point of like how these tokens are converging, and I think this will be the last thing that we do because I need to do an ad read, and then the EIGENLAYER and Layer 0 guys are going to be on. But very important. I feel like we have now, like there's the argument in early year, January, February, was there's too many fucking coins. There like, what are you going to bid? Not, the market isn't going up well enough. But now it's like there's really only like 10 tokens that you can bid. Like realistically, maybe 15. And you can like, and there's like flavor of the month, flavor of the week. If you really want to gamble on X402, you can buy that, like whatever the ping token was out there, and you could have bought that. But most of the time, it's really like only a few tokens putting in not even particularly like intense moves up. They're just grinding up like 3-4% a day. It's not like the old days where it was like Zcash and or exceptions. Clearly exceptions. Like we're in a ZODL market, or kind of not as relevant now, but I don't know. But yeah, like there's only 10-15 tokens that you want to bid, right? Max.
Yeah, I mean, also like I'd just be curious in general what percent like of all crypto purchases from buybacks, like all like the dollar amount of that and the dollar amount of like liquid capital in the space to actually bid things from like the fund side, like how do those two numbers stack up next to each other? Because like how many like dollars of buybacks has like Hype done since its launch? If you know, I would assume it's like hundreds of millions, right?
Yeah,
probably
like,
close to $1 billion.
It's closer to $1 billion than it is to 100 million. I think it's like 800 mil.
Yeah, like that alone is insane. I would say Pump is probably like the second largest in terms of like dollar amount of buybacks. I actually don't know who would like come up third though. Like I feel like it kind of trickles off, and those are both like trading related apps. I don't really know anyone else who's like making a substantial amount of revenue like that.
I think there are a few other tokens. I just don't think that there are a few other protocols. I just don't think like Jupiter buys back quite a bit as well. I just don't know what it is compared to their earnings, compared to their price, like their FTV. Radium used to buy back a lot more. Now, like obviously the market's shifted on the AMM side on Solana. But Aave is a big one. Maker perpetually like undervalued based on a multiple, but seems to, despite like them buying back, I think they're the earliest token to implement the buyback.
I think you're right. Yeah, I think they kind of pioneered that whole thing, and I think I just saw something that they're moving their buybacks from Uniswap to Hyperliquid for Sky. I'm not entirely sure about that, but I know there was like a big issue for them. Is like they they were doing buybacks, but they're also supplying liquidity. And I think they fixed that a while ago, but like that was like an issue. And I think they were just trying to figure out like where can we actually get like better execution. Like right now, like there's no like flow on chain for like Ethereum L1. Like the majority of like trading over there is like Sextex ARBs. So just like retail, it's getting like rinsed anytime they try to buy like on-chain tokens over there. And like there's no like new assets over there that people want to trade. But yeah, I'm pretty sure I saw something about that, about the buybacks moving over to Hyperliquid. So that's quite cool. But yeah, they have been doing that forever. I wonder what % of the supply they own as well.
I don't know. I also need to check that. I mean, like Maker, I think all of the old remaining DeFi protocols, Maker, Aave, I saw Multicoin just published a piece about how they bought, I think it's Multicoin. I don't want to be lying on Kyle Samani's name, but I think they just bought into Ethena. I don't know how Ethena's doing in terms of like revenues and price earnings, price sales, but I imagine that's also in the camp where it's like you see. I mean, they're moving into this white labeled stablecoin idea, which I think has a much larger and I think much riskier TAM than USDE, which I think it's a scary thing. People just get scared by it. I don't think it's necessarily at risk ever. Let's not say ever. You never know, but like I don't think it's at like this massive risk that people put it in. I'm sure there's people much smarter than me who can explain why it actually is, but I think it just gets discounted so heavily. Like it gets sold down so heavily when like any form of like the market sniffs out just a bit of risk in lending or like in stablecoin areas, and they're like, oh, I gotta fucking get out right now.
Yeah, I think like the best chart to watch there is like the like USDS supply versus like USDE supply. It's usually kind of like signals like risk on, risk off. I think like what Athena's doing is pretty smart, honestly, to expand beyond like a yield that's just reliant upon like funding rates, because obviously like they're kind of constrained there in terms of how much they can scale, because they also just need like market sentiment to be like super bullish for the yield to be great, and they need that to also like continue to grow over time as like USDE deposits like scale too. So I'm not sure what the stablecoin as a service is backed by. If it's backed by like their like BUIDL thing with Securitize,
it is.
I think like okay, then that like I think that's quite secure, and there's good like transparency there. So I think it's a smart move, honestly, and I hope that we see like Athena flip Circle in terms of like raw dollar amount that they hold within like the next couple of years. I think that'd be exciting because they are like a really like lean driven team, DeFi native, crypto native. And if you watch some of their tweets, it seems like that's like who they're gunning for is Circle. So it's nice to see like
you can't really gun for Tether though, because
no you can't. You can't. Yeah, there's some things better left unsaid.
I don't know if you can come for that, but
no.
I guess like Carlos wrote this piece and he was like long Met, and then like short other AMM tokens, and I think it played out. Oh, Ian, I'm gonna let you go. The big dogs have come in. Thank you for coming.
Can you segue me out?
Yeah. Ian, thank you so much for coming on. I really appreciate it. Have a fantastic evening. I appreciate you sharing your market thoughts as a renowned trader and analyst.
My pleasure. Thank you for having me on.
Thank you for coming on. I gotta remove Ian. Hello, Brian. This is gonna be a little personal for the first few minutes until Shuram joins in, but I hope that's okay. Are you doing well?
No worries. Yeah, great.
Very good. I guess before Shuram comes in, I wanted to ask you a few questions. If you wanna, and you can always not want to answer if you want, but I've been kind of wondering about what the strategy for Layer 0 is in terms of, I guess, issuing assets on Hyperliquid. I seem to think that I've seen a few, and this is Darren just joined us. This is another analyst at 0xResearch, but seem to see some like assets ending with 0, and I assume it's being issued by you guys, right?
So it depends. I think post USDT 0, people sort of love the naming convention in general. We have definitely been working with a bunch of different asset issuers to basically take them to a ton of different environments. So that is something that's pretty highly requested right now for sure.
That makes sense. One thing I had on McBrennan from MarginFi, previously MarginFi, now works at Project0. One of the things that he mentioned was how they can't really do, because they have to hop 2 links to go to Hyperliquid. Let's say, like they have to go to Arbitrum and then to Hyperliquid. Is that, I mean, you guys seem to be connecting everybody to everybody. Is that something you guys are going to be working on, like Solana?
Already solved. So we have a thing we call direct deposit for Hyperliquid, built specifically for Hyperliquid. So you can one hop any asset directly into Hyperliquid already.
Very cool. I did not know that.
You'll see some more integrations roll out around that. So we built it kind of semi-recently, and now a bunch of assets and other groups around are adopting it. So you will for sure see that, but available today.
Very cool. Hey, Shahram. Hey.
Hello.
Hello. Okay. Big day for me today and big day for you guys, I guess, last week. With EIGENZERO. Before we get started with the questions, do you guys want to give a short? And I don't know who to pick here, so I'll let you guys decide on who wants to.
Go ahead, I was already chatting some, so.
But what is EIGENZERO? What should people be looking forward to, and maybe like a rough overview?
Yeah, amazing. Hey, hi everybody. It's Shrey. I'm super excited to be here. Thanks, Brian, for doing this together. What is EIGENZERO? Right. So as layer 0 leading bridge, right? So does I think more volume than Western Union. Brian recently had a beautiful comparison.
5 times Western Union last month. So.
Man, they're crushing. See, amazing. So you want to build a crypto bridge, and like one of the architectures underneath layer 0 is this idea of a DVN, right? Which is a decentralized validation network, which will actually verify the messages and move the messages across different chains. And a question that shows up is, how do you know that a DVN is secure, is honest, it's trustworthy? And you can have different mechanisms, right? You can have reputation, you can have many parties, it's decentralization. These are different mechanisms. A very crypto native mechanism, which is what secures basically all blockchains, is stake, right? Ethereum is secured, Solana is secured, other chains are secured because somebody stakes and promises to run this network correctly. And can we have a similar mechanism for a DVN, which is some kind of crypto economic stake that is securing it, where if this stake secures this DVN and this bridge, it means that that this amount of economic security is backing this bridge. If this amount of economic security is backing this bridge and the operators are malicious in moving messages around, then they will lose their stake, and then they'll be slashed, and that money will be redistributed to the harmed parties, right? So this is the end-to-end flow. Over time, this will become like a fully insured bridge, right? An insured bridge is when I'm transacting, if my bridge is broken because of an operator malicious action, so because I'm taking counterparty risk on an operator, because of that, if I'm losing money, then I will get redistributed. So that's the idea of this is combining the two things that both of us are building: eigenlayer, staking, slashing, redistribution, layer 0, DVN, leading bridge. So we came together to build this product called EIGENZERO. Brian?
Yeah. I mean, the way I view it is, I think we can get into a bunch of this stuff, but effectively, I think there's been longstanding demand for how do you add an economic stake into this layer? And there's a bunch of different ways that people basically try to secure sort of different sides of this. And there's everything from ZK proofs to economic security to like all of these different stacks. How do you make a stronger and stronger sort of validation or verification layer? There's 2 sides of what we did. One is the framework, which is kind of like the big thing. Like, listen, here's a framework that anybody can now apply and use to build this economic layer on top. So every application who is rolling something out, every asset issuer has the ability to do this. And you can imagine there's some pretty interesting times. People used to think, you need a huge amount, right? You need to have, hundreds of billions of dollars security to be able to do this. But so there's a framework, and then there's our implementation, which is like the EIGENZERO DVN, right? And so for us, we just put up $5 million of zero in that. And so you're asked, well, $5 million, given the amount of volume moving there, not a huge amount of economic security tied to this. What you can actually do, if you look at something like an intent layer. So if you looked prior, people talked a lot about like across and intent. So one of the biggest complaints they had against them was this 90-minute window to get the assets back. So you had a 90-minute sort of approval period to be able to unlock your assets on the other side. Now you have the ability to basically be able to do that every, call it 30 seconds, right? And so now you think about $5 million, you think about it as the size of your pipe effectively, where you could secure $5 million of throughput every 30 seconds throughout the entire day. So now you're talking about the ability to do, many hundreds of millions or billions of dollars daily, 100% completely secured with zero risk, right? And you can talk about the ability of asset issuers where you see sometimes assets choose to set pretty long outbound confs from certain networks. And you could say, hey, we're going to allow we're going to monetize. So CCTP or something takes a fee for CCTP v2. So it takes some amount of bips. And you could say, we're going to allow fast withdrawals or fast transfers out of this network that has a typically longer period of time. We're going to charge a tiny amount of bips on that, but it's going to be effectively instant. It's going to be backed against this, and this becomes the pipe. And so there's a bunch of like cool things that you can do. But I think the framework to me is the most interesting piece of it all, because what we're most interested in seeing the evolution of this sort of landscape of DVNs. And I think there are a bunch of really cool things where with a relatively small amount of stake and a relatively small amount of charge for bypassing for a faster window to have near instant, zero block conf or one block conf transfers out of any network and so on and so forth, right? You now can create a model that's actually like very, very compelling to the end consumer. You have almost instant experience when you're talking about intent layer stuff. You have almost instant getting your capital back on the other side, which now means you can quote like much cheaper because you don't have duration risk where you just like have assets that are not being useful for 90 minutes. So a bunch of cool things in there that I think will be downstream unlocks. But yeah, the first step is like build it, get it out in the world, and kind of encourage people to see what they do with it.
Yeah, I want to take one tiny step back just so that the listeners can have a better grasp of what's happening. So when you say DVNs, do you want to kind of run over why they're involved in this process altogether?
Yep. Yeah. So I will try to keep this. You tell me if you want me to be more technical, and we can go down a rabbit hole as much as you want. Effectively, every chain, no matter what, is just like an untrusted state machine. They do not know the state of each other. They don't know anything. And so something has happened on chain A and something is going to happen on chain B, right? So this most commonly is like some asset burn $1 million here, mint $1 million there. There's a bunch of different ways that you can tell chain B what happened on chain A. And sometimes people put, a middle chain in the middle, and they say our special little network of validators is going to tell the truth about what happened. And like Circle, CCTP, I just mentioned, right? They have their own attestation where they just say they run an attestation server and they say, this happened here, over here. Like I authorized this mint on this side because I saw this thing there. We always took the opinion that building a generic set of parameterization for all applications is just bad. You don't want like your 1 cent NFT projects to be paying the same for security as your and getting the same security as like an application doing $1 billion transfers or multi-$100 million liquidations. Those are likely going to be willing to pay more for a much higher standard of security. So needing to force everybody to like one parameterization just makes everybody out of bounds. These guys don't get enough security. These guys overpay. And so the concept of a DVN was just it's abstract. This can be anything. Fast forward to today, there's about 52 DVNs on the network, and they look like all different kinds of things. These are big orgs. These are Ubisoft and Deutsche Telekom and Google, and these are groups like Nethermind and P2P. kind of like known entities. And then there's also things like polyhedra, which is a full ZK proof coming out of Ethereum, which is like the aggregated signatures of the whole ETH community. There's all of these different things that people have built to provide this attestation layer. What you typically see when you have like a USDT0 or an Athena or a BitGo, a WBTC, any of these, PYUSD, all of them get to define their own. And typically they're like, hey, like Circle, I wanna sign off on these messages as well. So me, PayPal, or me, whoever, I'm going to create an attestation. But I also probably don't want to be the only one because you don't want to be like a single point of failure. And so then they'll backstop and say, I must be required. So I must have signed off on this. But I also want to include, Google and Nethermind and Polyhedra and X and Y and Z, right? So you'll typically combine some number of these and you create your own sort of attestation layer. So a DVN is just any mechanism that produces the attestation of state. And again, that can be a single DVN could be 10,000 nodes. It could be a full network. And, in Cosmos, sort of every chain could be its own DVN. You really can be anything. It's a very abstract concept. It can be a single node of some guy in his basement who wants to run a DVN. Doesn't matter. And then, again, the applications themselves sort of choose what they want this set to be.
Perfect. That was a very sure. Go ahead.
Yeah, I think the simple way is who's verifying the message is correct. Right? That's it. So there's it could be a smart contract, it could be a group of people, it could be like, they are staked, they are not staked. All these things are possible. This modularization helped like a bunch of experiments that can be done on, like Brian said, 50 plus DVNs that have been built on top.
Perfect. And with EIGENZERO, Shriram, you guys are incorporating your existing operators to opt into this and say, I want to be part of this DVN or not.
That's right. So I think Brian said we have a framework and we have a particular implementation. So let me talk about the framework, right? The idea that, so firstly, what is the point of crypto economic security and why do we need it? So this has been one of the core theses of EigenLayer, right? As EigenLayer has invented this paradigm of restaking, but the core idea is how do you supply crypto economic security to any kind of service and network? So that's kind of like the underlying value prop of EigenLayer. Now you can ask, like, why do you need a DVN? So there are 50 plus DVNs. Why do you need a crypto economic DVN? What is the special thing that it does? So when you think about it, when you make a system trustless, then it can scale because anybody can provision resources into it. So I'll explain this. If you make a system trustless, anybody can provision resources and the system can scale. So what do I mean by that? Suppose I have a new chain, okay, and I want to connect my new chain to, like, I want to build a DVN that's going to bring messages from my new chain to other chains. Now the problem is, if I have to go with an existing DVN, that DVN has to add support for my new chain. It's a whole thing. I've talked to them. They have to accept that they have to expand this to my chain. I could do another thing, which is if I can just build my own DVN to transport messages back and forth from my chain, that's something simpler. But then you'll be like, who the hell is Shriram? Why would I trust messages signed by this DVN? But if I say, oh, the message volume on this chain is like, $10 million daily or $100 million daily, and I've put up $100 million of stake, then you don't need to know who I am, where I'm from, and like what my reputation is. So now, like, if I want to add my chain, I just add my chain, and then like I can throw in a DVN that actually validates my chain correctly, and you don't need to know who I am. So crypto economic security makes this system trustless. Why do I say trustless? Because either my message goes through correctly, or if the message didn't go through correctly, I'm going to slash the guy and get the money back. So, net, I'm okay. So if you have a framework like this, then the DVN system can scale infinitely, right? Anybody can keep adding new DVNs to actually secure new things. And as long as they're built within this framework, and I know that I have full economic security and it's fully insured. So that's the real kind of like thing that we're going for here with this framework, is to enable a whole slew of permissionless, DVNs to be built, all of them secured with economic security, and therefore they can all be trusted with a similar grade without needing to know who they are, where they're from, whether I trust them or don't trust them. So that's the big big thing that we're very excited about.
And again, the interesting point for me from earlier is if that $100 million of daily chain volume is distributed equally over time, you would only need $35,000 in stake to actually be able to secure that entire thing, right? It's typically not going to be equal, and you can set rate limit, or you can do all of these things to guarantee your pipe is sort of not being exceeded. But you can talk about being able to secure $100 million daily volume with maybe a couple $100,000 and comfortably never exceed the pipe.
That makes sense. Just to like clarify one thing for me, in the announcement, I saw that there was $5 million worth of slashable zero. Where does that come in over here? How does that compare to the $100 million 35K thing?
Yeah. So $5 million in zero slashable basically is, again, you can think about that as the throughput or the pipe. And so it depends on sort of what that's being set for outbound comps. But if you imagine 30-second period, well, now you can do $5 million sort of pipe every 30 seconds. So times that by 2880 for the daily volume. So, it's a big number for the amount of, 2880, 5 millions. You can do a lot of throughput on that. And even for us, when we're doing over $1 billion a day pretty consistently now. 99% of that is coveraged within this sort of like $5 million 30-second pipe.
One question I have here is, what are some things that, Brian, on your end, this seems kind of like it fits, right? Like it works because you have an existing system and you're adding something on top of it. Shram, I guess like my question for you is, was there anything that you guys were like, I don't know if this is going to work on our end, or if this is going to interact weirdly with other parties that we're involved with? Was this ever a concern for you?
Yeah, I mean, so the thing is, we built this, earlier this year, we went live with slashing and later with redistribution. These are the pieces that were needed. Brian and I did a podcast now, like more than, 14 months back, where we kind of like kicked off this partnership. One of the things I really love is building with long-term builders, people who are here and, have a long-term vision and actually working towards it. So really enjoyed getting to know Brian and starting to work on this. But, slashing and redistribution were not live. And those are two key features that were needed before we could actually, go ahead and build this product and showcase it. So in terms of what was needed, that was the first thing, right? So, slashing needs to be live on EIGENLAYER, redistribution needs to be live. And this is, the first lighthouse project that is actually showcasing all these features, building it together. So that's as far as the core EIGENLAYER system is concerned. Now, I know there's all kinds of details on, how does the Debian actually work? How does slashing who's the slashing committee? How is it constituted? What is the trust model? So again, there is going to be a lot of evolution on this over time. But starting to build the first one, how do you observe? For example, an L2 may make a claim and later say that they never made a claim, like a sequencer, right? Think of a L2 sequencer, it makes a claim and it says, oh, I never made this claim. How do you observe this? How do you attribute it? Do you fault the deviant or you fault the sequencer? How do you attribute these things correctly? So there's a lot of science that goes under the hood on this. One of the reasons, and out of abundance of caution, we launched on a few handpicked chains to begin with, right? I think it's 3 chains to begin with. And over time expand to cover the whole gamut of chains is because of this feature, because of this issue of how do you observe, how do you attribute things that you kind of when you want to build a trustless system, things that you kind of slip under the rug. Oh, the sequencer said, therefore it should be right. But the sequencer said, now the deviant said, but did the sequencer tell the deviant or the deviant told you something wrong? You need to know these things correctly. And so part of the work, ongoing work actually is to actually identify these things. And wherever there was YOLO trust models, again, chains that don't finalize. Chains that say they may have finality, but actually if you dig under the hood, you actually find out they don't have finality. These kinds of things are all problematic because we're aspiring for a high trustlessness in the bridging model. So lots of fun stuff for us to get into, like the rabbit hole there. But that's, I think, slashing, redistribution, core on the eigenlayer part. The first Lighthouse integration with that. What are the conditions for slashing? What is the observability like? So more research, happening. But I would say this is one of those places where we are putting not just a spotlight on what's happening in eigenlayer, but what is kind of like other people are slipping under the rug in the rest of the ecosystem. So this kind of like sunlight is the best disinfectant here.
Perfect. Go ahead there.
So I just want to say, like, we've talked a lot about what's taken to create EIGENZERO, but on the developer side of things, what is the unlock for that group of people? Like, what changes for those that can build on top of EIGENZERO, or that can build with EIGENZERO?
Yeah, I mean, I think the biggest thing is as an application, your sort of role in this is to pick this group of this attestation layer for what your validation layer is. And so now you have this sort of like $5 million of slashable stake that's guaranteeing the transactions on sort of this layer that's happening there. And so what you have is, again, an option, and your set of options that now is potentially more secure than what you had prior. And then on the other side, which I think from the framework side is what people find more interesting than maybe the specific instance, is you as any application or any asset issuer now have the ability to have your own. And so we had a huge demand actually for asset issuers who said, hey, we want to secure our own messaging and put up our own stake to, again, create like this Piper throughput. So now you might have you have asset X and you're some large asset, and maybe you're moving $1 billion, $2 billion, $5 billion a month across the rails. You might want to put up X, 5, 10, 50, $100 million in stake that one allows people in the community to like stake into this, and then allows them to potentially get yield if you're again allowing faster withdrawals, allowing people to bypass that. Again, if you go the CCTV route, you charge kind of a small fee for the convenience of this fast sort of bypassing of finality. So then the sort of mechanism bears the risk, but then there's some reward for that in terms of the overall throughput. So it gives you the ability to offer like a more dynamic product. And I think both users, we've seen really consistently, users are willing to make large trade-offs for like very fast experience. You see it with a lot of the some of the other bridging solutions right now are just like very, very fast, and they're being run out of EOAs, but they deliver like obviously just an incredible experience, just bam, delivered. And so people want that, and they're willing to give it. And so if you can, as an asset issuer, give them that in a way that sort of is more economically secure, delivers the same experience, all of this, then it's both compelling for the asset issuer and compelling for the end user, and then gives their token holders some ability to again stake into this, participate in the overall security, etc. So I think there's a couple of vectors there.
And when you say people want speed, you're referring to like people want the speed, but they don't really necessarily want to give like a cut every time. So if you have a DVN on the back end,
yeah, more like I think so. When we were building like Stargate, let's say, right, we were like very adamant that everything was 100% on chain, and you have these pools of native assets that exist, and you were doing verification on like a per message basis, and on and on and on and on. And then came Intense, and people were like, well, rather than waiting for 2 minutes for finality, I can get my asset in a couple of seconds. And who cares that, maybe there is only like one solver filling this, or maybe there's in times of volatility, there's just like not going to be a market. There's no like censorship resistant aspect to it, any of those things. What the end user wanted, so you can basically frame it as the end user cared about the average experience and not about like the worst case experience, right? And I think most mechanisms in crypto have to design obviously in like a hyper adversarial permissionless environment against the worst case. So Uniswap, all these things are built to protect against the worst case. And what you found out in most of the consumer applications today is the users are actually optimizing for like the average case, not for the worst case. And so you started to see a lot of trade-offs where now there are a bunch of things that are literally just like straight EOA just deliver, and they give an incredible experience. You quote off chain, you give them money, and they give you money on the other side, and like, you know, they do a good job. They're a service provider. It's great. You've been able to trust them so far. You'll probably keep being able to trust them, no problem. And like, people are, again, there has been an appetite for that. And so what you have seen again is, historically, we were building continuously for the worst case. I think at the protocol level, you always have to build for the worst case. But actually, I think the asset issuers and the applications are building more and more for the average case of the consumer and trying to deliver an amazing average case. And I think what you want is to be able to give them a really compelling, easy way to deliver a really, really good average case while still doing it in a way that like maybe protects the user a little bit more, or gives them these sort of more secure environment to do this in. And so I think from our side, that is sort of the unlock for the end developer. Because again, the developer and the user are chasing this average case. You want to give them sort of like the most secure, best way to do that.
I think that makes a lot of sense. And one thing we talked about is how this relates to, I guess, asset issuers mostly. When you say asset issuers, do you specifically mean real world asset providers, like tokenizing assets, bringing them on chain, or is this more like referring to general asset issuers, chain to chain?
Yeah, I view asset issuers and applications as a little bit different, right? Application is going to be Sushi Swap built swaps embedded in the application, right? And it's like originally it was like swap, bridge, swap, and now they've done all these other mechanisms to build out sort of like a fully functional application. Whereas an asset issuer might be like PayPal's PYUSD0 or PYUSD, right? And there is just an asset, and that asset wants to move, it wants to have more AUM. But at the end of the day, the asset issuer is issuing a single asset, and the asset is the thing, it is the product.
Makes sense.
Just adding a little bit there, there is a RWA type asset issuer, but also I think Layer 0 has a format called OFT, which, if you're issuing a native on-chain asset, normally you have to choose a chain in which it's launched. But the Omnichain Fungible Token Standard actually lets you launch a token which is across many chains. But then you have to decide like how the messages go across chains. So that's another example of an asset issuer, which is even just like natively on-chain assets. It doesn't have to be RWAs.
So one thing I would like to ask here is, like, for the developers, like, just to follow up here, how should developers compare like the, I guess, EIGENZERO to other DVNs? So I know that in the past, or I guess in the past, one criticism was that like DVNs, despite having like the capability like to choose whatever DVN people wanted, they would just go with like Google Cloud or some set of providers. From my point of view, it seems like EIGENZERO provides like a pretty easy funnel into like a distributed network, so that you don't have that like same centralization. Is that correct, or is there how else would you describe that?
Yeah, so I think it's a little bit, and Shuram, obviously you comment as well. I think it's a little bit different, where the EIGENZERO DVN is not. There's like a slashing committee, and there's some distribution around that. The actual operation of the individual DVN isn't really significantly different than existing DVN. It just happens to have economic stake tied to it, right? It isn't this super wide distributed network, which again is something that people can do and likely will do. That's the point of the framework. This is more an example to show what can be done and how it can be done, and tying economic stake to it and sort of setting the stage for everybody else. I think the big things around the DVN spread itself is many people use you'll have overlap on a bunch of the DVNs. We have all this data that we can sort of like publish and show. So like actually Layer 0 Labs DVN gets used a lot, but the Layer 0 Labs DVN is never used like exclusively. And so if you actually look at the set, there's actually reasonable amount of split across applications, where like almost all of the big applications, I mean, if you talk Athena, Ondo, USDT0, PayPal, PYUSD0, USDG, or PYUSD, not PYUSD, or USDG, on and on and on and on, BitGo, WBTC, all these things, right? Every single one of them uses diverse, and like not a single one of those uses the same set of DVNs as any of the others. Huge amount of overlap between them, where a bunch of them may actually all share a DVN, but there's a bunch of others that are sort of mixed in there, and sometimes it's your own, sometimes other third parties, etc. So the point is, like, you want to build resiliency against, and the way that we always viewed it is, again, single parameterization is global exposure. That is broken. Everything is broken. And this, if any of those happen to have all of their DVNs corrupted, broken, malicious, colluding, all of these things, it's still isolated only to a single asset. The broader network is like not affected at all. And I think what you want to do is, again, to continue to have this like bifurcation of, especially as you get larger and larger assets, or as you get these, you want there to be as little overlap between exact identical sets as any of them. And it gets harder and harder to think about a scenario of like broader corruption the more that you do that.
Yeah, just I want to add one thing here. This is, people conflate two different concepts. One concept is decentralization, another one is trustlessness or verifiability. And so, the whole idea of, for example, the roll-up paradigm is that you have a single node doing the computation, but the computation is verified, and therefore, like, you don't need to worry that the node can make a mistake. Or, in this case, that's the paradigm that the first, framework is actually showcasing. Is even if it's a single node doing the action, it has put up a collateral which is greater than the amount, volume flowing through for that time, and therefore, you're not really trusting that node. You're trusting that the mechanism to actually enforce the slashing and redistribution, as opposed to you're trusting that node. So that's a really good like model to understand, right? Because you don't need. So where do you need decentralization? Where do you need trustlessness? This is more on the trustlessness rather than on the decentralization. Second one is, this framework can be expanded to make it more permissionless for anybody to, as long as you put up more, enough stake, I should be able to sign off on a message. I don't need to be this one node. I can be any node. So make it more permissionless to do that. So those are the kinds of directions that we are headed in. So the idea being, even if in the normal mode only a few nodes are running it, anybody can spin up a node and permissionlessly validate if these nodes go down. So that's the two faults you worry about, right? Is the message sent correct? If it's not correct, you can slash them. If the node just goes down, it's just like robustness. You can have another node spin up and do it. So that's how we think about it in terms of like the decentralization versus trustlessness here.
I want to double click on something, or just to clarify, I want to ask, like, where does EIGENZERO fit in the grand scheme of the roadmap for Layer 0? From my point of view, Layer 0, there's been a lot of focus on asset issuers and providing verifiability to those asset issuers. And I see this across like different infrastructure providers as well. Like if I look at like both the Chainlink team or like Pith or something like that, those teams all are like partnering with asset issuers in the same way as Layer 0 has with the Fireblocks engine. And they all have interoperability solutions that they're backing with crypto economic guarantees as well. Where do you see this like trending in the long run?
Yeah, I view it as a tool in a toolbox ultimately. Like, I think if you look again, we just talked about last month, right? Last month at $38 billion, I think that translated to something like 90% across the market in terms of like value transferred overall, right? It's like asset issuers largely, by and large, stable coins primarily, and many others are building on Layer 0. And the question is, why are they building on Layer 0 and what do they want, right? I think there's a couple of things there. One, for us, the large thing had always been, and I joke about it because it's like, job's kind of done because like the protocol is immutable. I couldn't change it if I wanted to. And that's part of the core guarantee to the asset issuers themselves, is that you don't have to trust us, right? The protocol is there It is immutable. We cannot change it. It exists. You have comfort with knowing that there's longevity there. And then it is really like, okay, great. What do they want? Do they want decreasing latency, right? How do you get DVNs and sort of the off-chain workers that are creating these attestations? How do you build better clients that people can run? How do you incentivize other groups? So client diversity is something we cared about a huge amount, right? I think there isn't actually another group in the space outside of Ethereum who has as much client diversity. Like we have 4 pushing 5 unique clients now, a bunch built by teams that are, not us at all. We've built 2 of them, but there are 3 other unique clients built completely from the ground up. And so when you talk about like downstream effects of many other solutions right now, just push client updates and everybody accepts it. And if there's a bug in that, then it doesn't matter how many validators you have because there's a bug in the client. It's just everything is rugged, right? And so, there's a bunch of these things where we just continue to try to figure out how do we provide better, stronger and stronger guarantees to the asset issuers or the people building on top of the protocol so that they can deliver sort of a world-class experience to their end user. And I think this is like part of that approach overall. And I think, again, I continuously get these moments that are crazy for me because for me, I remember launching the protocol and I remember the first like dollars going through the protocol and everybody who's using it and like people are asking you questions and do everything. And like we were sitting there the other day and the team sent me 2 transfers and they're like, oh, hey, like $550 million just went through in a single transfer. And then it was like $800 million just went through in a single transfer. So somebody sent $800 million, almost $1 billion in one single message. And I have no clue who that person is. No idea, right? It's just like the protocol is there. It works. It exists. It's being used like in production at scale in a permissionless way. And I have absolutely no idea the participants, right? And like that is extremely powerful. And I think that's what you want is to build something that like supersedes you and people needing to trust sort of you and this solution that you're providing. What we're providing are tools for people to be able to deliver their own solution. Again, the asset issuers come in and they build with the OFT and they build with sets of DVNs that they like, and they build, they take this stuff that is existing, but then it's out in the world and like they're driving it and they're driving adoption and they're using it overall. And I think like that is how we view it is we're going to continuously build better and better tooling that give the asset issuers what they need to be able to have their customers, not our customers, their customers come and send $1 billion in a single transfer. And like that itself is the thing.
That makes a lot of sense. I am kind of jealous that you experienced this feeling that somebody sent through $800 million. It is very awe-inspiring. Sure, I want to ask you the same question, but with a kind of a twist. I have we did a pod before as well. I'm not sure if you remember. It's okay if you don't. But and back then it felt like EigenLayer was very much like focused on building this system and was not particularly product focused. Versus now it feels like over the past 6 months you guys have become increasingly more product focused, and EIGENZERO feels kind of like that to me. Is this, I guess, like where does EIGENZERO fit into your plans, and where do you guys see going forward?
Yeah, absolutely. So we built our core thesis at EigenLayer is Eigen in German for your own layer, right? You should be able to build what you want at the kind of protocol level. And so the way we've evolved from that starting point is initially we were like, okay, we have this powerful layer of trust that anybody can tap into and build whatever, decentralized protocol they want on top of it. And what we found is while this is great for like deep, complex infrastructure builders like a Layer 0 or Infura, right? These are products building on top of EigenLayer. It is not good for a regular application developer. Like a regular app developer cannot just directly come and build an AVS on top of EigenLayer. It's extremely complicated. And so, this is like bare metal, right? And so the way we started thinking about it is like, if you think of like a cloud, right? And in the cloud, the base layer of a cloud is a data center, right? If you are OpenAI, you want direct access to the data center and directly build something on top of it. And so that's how I view this like EigenZero, partnership between Layer 0 and us. They're like OpenAI, they have their own customers, they have like huge distribution. They want to build something bare bones, powerful, bare metal. And so they can directly use EigenLayer. Whereas most developers, I'm just building an application and I want to use an AI agent in my application. I'm building an application, I want to use off-chain compute verifiably, right? So there's a broad category of use cases that application builders want, and they don't have the tools to go and build an ABS by themselves. So we launched 2 new services, EIGENCompute and EIGENAI, which is basically run off-chain compute, give me a Docker container, go build, it goes and runs it off-chain and then brings the result back on-chain, using different trust models. So that's an example of us taking the step to go closer to product, closer to users, closer to developers, right? EIGENAI is something similar, right? I want to run an AI inference, right? I want to bring that result on-chain to make an action. And I take this action, I do this inference off-chain and bring the results back on-chain, but in a trustless, verifiable manner. So those are 2 products which are much more abstracted, much easier, right? So one of our friends who's a hardcore engineer, called and told me, man, it's so hard to build an ABS. It's so easy to build on EIGENCompute, right? And it's kind of like that. And this mental model of data center and bare metal data center and services built on top actually is a very good model to think of, EigenLayer and then the services that we've built on top, right? Very powerful builders can go and actually directly configure the data center to do what they want. But most application builders want highly abstracted. If you go to AWS, you want a storage service S3, you want a compute service EC2, you want an AI service Bedrock. This is what you want. What we've built is EigenDA is our data service, EigenCompute is our compute service, and EigenAI is our inference service. And so when I build an application, I'm not any more restricted to the developer environment, EVM or Solana or whatever. I can actually run something off-chain and then bring those results back on-chain, in a very fast loop. So, and one of the big things we are actually envisioning here is AI agents. If I want to build AI agents, I need both, compute to be verified, the input data streams to be verified, and the AI to be verified. And so by mixing and matching all these things, you can actually get really powerful experiences built on top.
Perfect. I think that makes a lot of sense. I guess one last question for both of you. Again, you'll have to decide between yourselves who wants to go first. But so what is the next step for EIGENZERO? When are we going to get some exciting updates on who's onboarded, and what is the, let's say, 6 months? Although I'm not an engineer, so I don't know what timelines look like. So maybe you can give me a better timeline estimate as well.
Yeah, I think I'll start. I think the most exciting thing in all of this to me is the framework, right? It is what are other people going to come and build. And so I think if you want to look 6 months forward and say, hey, was this, did it work? Did the market care? Was this successful as a product? I think what you look at is how many other people have come and built? What other developers or assets have come and used this as a framework to actually build their own? And so I think the things that are interesting is when you start to see these other large assets, and again, all of the ones that I named effectively, and start to say, hey, are they rolling out sort of their own mechanism of slashable stake? Are they putting this up? Where are they using it? Is this to make sort of intense, have faster rebalancing? Is this to make it so that you have again, like an instant bridging option for OFTs? Is this to do X to Y to Z? And I think there's a bunch of interesting paths that people can take it down there, but it starts with somebody from the asset issuer side saying, hey, this is something I want to do. And again, we've had inbound interest of people saying, I want to take my own asset and allow people to stake into this. So turn it into like a community token style mechanism that has this reward back to those people for sort of like the risk that they're bearing on the underlying chain side, or whether they just do it themselves internally and kind of what that looks like. And so they from the foundation side or from whatever, right? So I think there's a couple of different things, but like Sriram said, the end result is that the user has a trustless experience because it has stake that is bound more than the value that is being transferred. And so they don't need to think about what the option set is for DVNs, what any of these things are. It is just, is there more economic stake than what is current throughput going through the pipe? If yes, great, everything is perfect. And so I think, yeah, for me, again, the 6 months is just who adopts it, what does it look like, we're both people who build largely as sort of groups for the end developer. And so while us launching our own thing is cool and is interesting, and seeing usage and adoption would be nice, I think both of us are much more interested in seeing developer adoption and the end users of the underlying protocol. Actually, like, that's where real growth comes from. And so that for me is like, that is the measure of success.
I know I know Box had one more question, but I do actually have one more thing that I would like to ask Sriram. So, and I could be entirely butchering this, but I recently read about like a kind of a cyber attack using AI agents, there was a international like cyber attack with AI agents for the Claude Code tool, and I'm curious if there is like an angle here for verifiability, because it seems like this is like a prime area for something like this to be involved. What are your thoughts?
Yeah, great question. It's an interesting angle, but I think it's not an easy problem for us to solve. So let me just state like where trust lies in when, for example, when you're using an AI system. So the first one is what I call our runtime trust. So maybe let's just contextualize on a simpler example. Let's say trading agents. Okay. So I want to use I want to use a trading AI agent, right? Why do I need it to be trustless, secure? I'm giving it some money to go and do my trades. So, what if I give it money and then like it goes and buys? So let's say like Grok comes up with an automated trading agent, and then it goes and buys a bunch of Dogecoin, okay, or GameStop or something, and then people may lose money, and then they're going to be like, oh my God, it's Elon like made Grok buy like Dogecoin or GameStop, and then like I lost money. So it's a huge liability surface area for a Grok or ChatGPT. In fact, ChatGPT came up with an advisory or update to its terms of service last week, saying that no legal advice, medical advice, health advice, or even human advice. I don't know. They excluded all kinds of advice. And like the reason is they're worried about liability, right? Because now as they're kind of like becoming more and more central. So when you think about the input-output interface to like ChatGPT, you don't know what's running in the back end. You're just like, oh, that's ChatGPT. Like that's what you know. Like you don't know what it is that you're talking to. So the first level of trust is I can guarantee, like Eigen can, for example, guarantee that it's this AI agent with this specific code, this specific model with this specific weights, and this specific compute, which is actually doing this task. That's what we can guarantee, right? We can get just like exactly what Ethereum guarantees for smart contracts. It says this piece of code can only move your money, right? Same thing. This AI agent is this piece of code, this piece of data, this piece of inference together. That is what can actually touch your money. Now, if that piece of code, is it good or bad, right, is outside the purview of like what we can underwrite trust for, right? Just like Ethereum, like, somebody can write like a balancer smart contract, which has a bug, right? Or somebody can write like a thing that doesn't have bug. But that's not a thing that Ethereum knows, whether it's a bug or not. It just knows this piece of code can run this piece of money. So I think of two layers of trust in AI. Like one is the code, is it like, break the black box and know this code's running your thing. But is that code doing what you think it should be doing? That's another layer of like, trust. And the way I think that we resolve that as a society and like what we can play a role is in insurance, right? So normally, these are risks, right? So you don't know that a code, so imagine there's a travel agent that's booking tickets, right? And I say, book a ticket from SFO to SEA. I'm thinking it's Seattle, but it's actually booked a ticket to Southeast Asia, right? And so like suddenly I'm like, okay, now I lost my money and paid $2,000 to book that ticket. And so you can use things like, but I know I'm talking to this model, and this model makes errors like 1% of the time. So somebody, maybe like an eigenlayer stakers, can come and underwrite that risk as an insurance and say that this model makes an error 1% of the time. Somebody loses money because of that, I'm going to pay them back. How? By collecting money from all the people in the normal mode. This is exactly how insurance works. So that's the kind of thing that we can do for the software. This code is running, but this code did something mistake. And so things like cybersecurity attack are the hardest, because it is like a code. I know this code's running, but somebody figured out how to cheat this code and extract all the money from it. So then you're out of luck, basically. Right now, we need to know how to build systems that are actually more robust to that.
That makes sense. Okay, Shriram, then asking the same question that I asked Brian. What does the next 6 to 12 months look like for EIGENZERO on your end? What are you guys focused on?
Yeah, I think Brian's totally right. Like, our main goal is always developer adoption, right? So that's our kind of like, we are a developer platform, so we want developer adoption. More developers come and build on top of it. We already, like Brian mentioned, after we posted this, we got a bunch of people asking us, hey, how do I come build a DVN using this framework? So that's really what we want. And other developers taking this up and then going and building new and interesting things on top. So in terms of the underlying technology itself, we will continue to research and evolve this. Both of us, a portfolio of Andreessen and Horowitz, and their research team has actually helped us a lot in thinking through like all these observability conditions I was talking about. How do you attribute who's actually at fault if a sequencer lies or if a DVN lies? So those kinds of things, we will continue to evolve the underlying framework and make sure that you can actually like support a wide range of chains and conditions. Yeah, so on our side, we improve the underlying framework. On the developer side, adoption, uptake, and more asset issuers choosing these things. And over time, if something like this becomes the standard, where I don't need to know who the developer is, I don't need to know who the deployer is, I can just directly check it's a cryptoeconomic DVN, it has X amount of stake, I don't need to worry about anything else. I think would be the good end state for us.
Perfect. That makes a lot of sense. Guys, I want to thank you both for coming on. This was really fun. Before you go, I assume everybody follows both Layer 0 and EigenCloud and is familiar with what is happening. But do you want to give, I guess, like what should people look into? What should people read about? What should people be focusing on? What do you want people to come with?
Maybe I can start. Because we announced this new umbrella brand, EigenCloud, right? Think of a cloud. The underlying layer of the cloud is a data center. The underlying layer of EigenCloud is EigenLayer, because it's decentralized, distributed, cryptoeconomic data center. On top of which we have these services, DA, compute, and AI, EigenDA, EigenCompute, EigenAI. So there is a huge number of new unlocks for developers with compute and AI. You can build many interesting new things very, very quickly, including things like AI agents, games, agentic payments, all these things. So I would urge so we just launched this developer website. Let me just put the link here. I don't know if the users can see it, but developers.eigencloud.xyz, basically explaining some of these things. So excited for users, the viewers, to check this out and build new and cool things. I think one thing I just want to say abstracting out is crypto has been infra constrained for a long time. I think with the set of things we are building here, crypto is no longer infra constrained. So there is, for whatever you can dream up, you can build today, because you can use off-chain compute, you can use on-chain compute. All the chains are connected with things like Layer 0 and EigenZero. So you can build pretty much anything you can think of. But I think people are still stuck in the mindset of like where infra was like 1 year back or 2 years back. I think the ability to express much, much more complex computation trustlessly, verifiably has grown. So like the call to developers is think of new and cool things that you can build on top of it.
Yeah, I think for us it's similar, right? I think I've said it a couple times recently. I think people right now, obviously, a bunch of our attention has been has been where we lived right now, and we've had a crazy amount of adoption. It's been amazing. I think stable coins have been a huge boon for us, and we just continue to see growth in terms of numbers and metrics and how people are using it and what it's actually happening. And rolled out things like we talked about at the beginning of this, like direct deposit into Hyperliquid, and all of these other tools that just make it easier and easier for people to like do the things they want to do at the asset side. I think people are going to be really, really shocked over the next 6 to 12 months how deeply we've bridged the gaps into some of the other sides of the market, and the institutional side, into the sort of adoption across sort of like everybody who is now coming into the technology versus prior, which I would say is like the more native side of things. And so for us, if you're interested in building really any asset, any piece of technology, like we want to have the conversations. We're actively engaging with everybody across the board around this stuff, even just how you think and ideate around it, how you design mechanisms across multiple chains. But for anybody else who's listening, I think follow along, and you should see more of what you have seen. I think the next couple of next year is going to be incredible.
Very good. Very excited for both of you. Guys, again, thank you so much for coming on. I really appreciate you taking the time.
Thank you for having us.
Darren, I'm going to remove you as well. Goodbye, my goat.
Oh, bye.
Okay. That was fun. Guys, unfortunately, at the end of the stream, it's only me left. Before we go, I would like to give one more shout out to Aptos for sponsoring the stream. With nearly 400 million in BTC assets on chain, supported by a secure, fast, affordable MoveVM environment, Aptos has become the BTCFi growth chain. I can't express to you how grateful we are to Aptos for sponsoring the stream, and I recommend that you guys all check out BTCFi and what's happening on their chain. Once again, thank you so much for listening. I appreciate all of you, and wishing you all a fantastic weekend. Peace.